Islamic finance system is a method of financing that must adhere to Sharia law. The term can also apply to investments that are permitted by Sharia law. Along with the creation of Islam came the common practice of Islamic money and banking. Formal Islamic finance, on the other hand, did not emerge until the 20th century. The Islamic finance sector is now growing at a rate of 15% to 25% per year, with Islamic financial institutions managing approximately $2 trillion. Meanwhile, Islamic banking is a banking system that follows Islamic law, often known as Sharia law. Mutual risk and profit sharing between parties, the assurance of fairness for everyone, and the fact that transactions are based on an underlying economic activity or asset are the core concepts that regulate Islamic banking. These concepts are reinforced by Islamic banking's fundamental beliefs, which encourage actions that promote entrepreneurship, trade, and commerce while also benefiting society. Interest, gambling, and speculative trade are all forbidden activities. Iran is one of the pioneers of Islamic finance. The Islamic Republic passed the Riba-Free Banking Act in 1983, 4 years after Ayatollah Khomeini's revolution that deposed the Shah, compelling local banks to reorganize their business on Sharia-compliant goods. After more than 3 decades, the Iranian banking industry is still totally governed by Sharia law and is by far the greatest hub of Islamic banking in the world. However, because it is inspired by Sharia law, which sometimes differs from conventional Sunni jurisprudence, its experience is unique within the worldwide Islamic community. Iran's banking sector follows Islamic precepts, which prohibit generate or paying interest. Interest is considered usury in Islam, and the holy text of the Quran forbids it. Iran's bank carry out business transactions, including the exchange of products and services in exchange for a portion of the assumed profit.
The main objective of this report is to analyze the development of the Islamic financial system and capital market in Iran. After completing this assignment, we will be able to first be informed on the history of Islamic financial system and Islamic banking and finance institutions of Iran. Second, to determine the total number of the Islamic banking and finance institutions that been developed in Iran and make comparison with number of its conventional institutions. Third, to calculate the Iran's Islamic banking and finance fund size and its growth rate from the year of inception until present date. And fourth is to examine relevant issues related with the development of Islamic banking and finance in Iran. Fifth is to give our view of point about Iran's Islamic banking and finance development on its prospect. These objectives can be achieved by conducting research on Iran's country and preparing our proper report on this matter. The government set out to restructure the country's economic system into a fully Islamized financial system based on Sharia principles after the Islamic Revolution ended. In the process of Islamization of the financial sector, there were 3 significant phases. During the initial stage, the financial system was nationalized, overhauled, and reorganized from 1979 to 1982 to eliminate any flaws in the current financial system. With the approval of the law on foreign investment, banks are being nationalized. All private banks in Iran, including 14 of them, were nationalized in June 1979. There are 13 Iranian banks and 13 international banks. The establishment of a branch bank by a foreign bank was prohibited in Iran. Only representative offices were allowed to be established. On the 25th of June, the identical 15 privately held businesses last year were nationalized. 27 domestic banks were combined into a central bank in 1980, while 9 more banks, 6 commercial banks, and 3 specialized banks were formed by merging institutions with comparable activity. Malat Bank, Mali Bank, Sadrat Bank, Tajari Tijarat Bank and Bank Rafa were among the commercial banks. Keshavarzi Bank, Maskan Bank and Sepah Bank were specialized banks, as were Kalgaran and Sepah Bank and Bank Sanad of Madan banks. However, existing banks such as Bank Meli, Bank Sepah, Bank Sadirat and Bank Rafa Kalgaran continued to operate under the government management. Similarly, Bank Markazi Iran's Money and Credit Council, also known as the Central Bank of the Islamic Republic of Iran (RCBI), decreased interest rates paid by commercial banks to borrowers this year and those received by depositors. During this initial phase of Islamization of the banking system, banks revised their operations and avoided using fixed interest rate in their deposit taking and lending operations. The period from 1983 to 1986 marked the second phase. During this period, the structure of an Islamic banking system was put in place with the passing of the usury-free banking law on 1st September 1983, which came into effect in March 1984. The enactment of this law opened a new horizon in the banking practices in Iran. The law banned the payment of interest on all lending and borrowing activities. Hence, interest on loans was replaced by a 4% service charge, while interest on deposit was replaced with profit rates of between 4 to 8% depending on the type of economic activity. Interest on deposits were converted into a guaranteed minimum profit of 7% for short-term savings and 8.5% for long-term savings account. The law also described 14 types of operations applicable to assets and liabilities. However, an exception to this prohibition of interest is provided by the regulations on monetary and banking operations in free trade, such as industrial zone, which states that foreign currency transactions conducted from within a free zone are exempted from implementing the Islamic banking system. It remains unclear, however, whether this exemption is consistently applied in practice. All banks were given a deadline of 1 year to convert their deposits in line with the Islamic law and 3 years to fully convert their operations. However, an exception was made for the ordinary transactions of the central bank with the government institutions, public enterprises, as well as banks, as long as these institutions use their own resources. With the legislation of the usury-free banking law, banks shifted their lending operations toward participatory modes of contract, and in the consequent years, they fully transformed their operations from that of a fixed interest rate to be based on profit rate. The third phase began in 1983 and continues until today. During this phase, Iran experienced a reconstruction of the financial system, concentrating on reforming the regulatory conditions through the implementation of a number of 5-year economic development plans.
First of all, IFS stands for Islamic Financial System, which refers to a system that simply as interest-free that does not provide a correct picture of the system as a whole and tends to create confusion. Prior to the foundation of the modern bank in Iran, banking operations were conducted in the traditional manner, that is through money exchange. Money exchange has become a popular enterprise in Iran as trade and business have grown in the country. Coin and hard currency exchange were also frequent in Iran. Iran has 3 types of bank, which is state-owned, private, and non-bank financial entities. Bank Markazi, the central bank, oversees all of these institutions. Commercial banks, private banks, and Gars Al-Hasanah Bank are among the state-owned banks. Iran now has 30 banks and 2 financial or credit institutions. The Tehran Stock Exchange lists 20 of them. Iran's local banking sector has overcompensated and it is effectively overbanked despite the country's isolation from the global banking system as a result of sanctions. Iran has about 15 bank branches. The majority of each are owned by Bank Meli, Bank Sadirat, Bank Melat, and Bank Tijarat. Since the country's economic system was Islamized in 1979 and the usury-free banking law was passed in 1983, all Iranian banks can only engage in interest-free Islamic transactions, which are carried out through Islamic contracts such as Mozarab profit loss sharing, Forush Augusti installment style, Joel free fee-based transaction, Salaf futures, and Khas Al-Hazanah or Qad Hasan benevolent loan. Islamic banking is governed by a legal framework. The Islamic Republic of Iran Central Bank is the country's central monetary authority. The Iranian Central Bank is a government-owned corporation that was established in 1960. It supervises credit organizations and banks in Iran and issues banks and currency. Other responsibilities of Iran Central Bank include maintaining the national currency value, maintain the country's balance of payments equilibrium, facilitate transactions involving trade, and increase the country's growth potential. Here is the list of the Islamic bank in Iran. First bank is EN Bank. EN Bank, also known as Iqtisad Novin Bank, was Iran's first private bank that founded in 2001. Individual consumers, small to medium-sized businesses, corporations, and public entities can use this bank retail, corporate, international, and commercial banking services. Second is Bank Melad. Melad Bank was established in 1980. In Iran, the bank offers commercial banking services such as account transfer, forex trading, negotiable banknotes, foreign exchange facilities to finance circulating currency, eco mid-term finance loans, and eco short-term finance loans. Third bank is Bank Pasagat. Bank Pasagat was based in Tehran, was founded in 2005. Banking and finance, mining, oil, gas, and energy information technology, and real estate development and construction are among the sectors served by the bank. Fourth is Persian Bank. Individuals and legal companies in Iran and other countries can use Persian banks, banking products and services. Short and long-term investment deposits are accepted by the bank. It also offers ATM services as well as telephone, internet, and mobile banking. It has around 294 locations. Fifth bank is Bank Tijarat. Bank Tijarat is one of the Iran's commercial banks that offers people and businesses a variety of deposit and loan options, as well as telephone, internet, and mobile banking services. It is headquartered in Tehran and employs approximately 21,400 people. Sixth or last is Bank Sadarat Iran. This bank was established in 1952. Bank Sadarat Iran operates networks 2,714 branches in Iran, as well as 21 branches and 3 regional offices in other countries. The bank is based out of Tehran and employs around 2,400 staff. In Iran, they do not have conventional bank. In theory, Iranian banks use provisional interest-based transaction but retain the accounting standards of conventional banking.
According to Reuters, Iranian banks accounted for over a third of the estimated worldwide total of Islamic banking assets. Although sanctions have hurt Iran's banking industry and its Islamic financial system have evolved in ways that will complicate ties with foreign banks. According to the latest central bank data, Iran's banking assets as of March 2014 totaled 17,344 trillion rials or 523 billion at the free market exchange rate. According to the banker, as of November 2015, 3 out of 10 top Islamic banks in the world based on return on assets were Iranian. Iran's financial system has seen significant changes with the country's banking industry undergoing massive privatization and modernization. State-owned banks, including commercial banks, private banks, and specialized banks or Qars al-Hasanah banks, traditionally dominated the financial system, accounting for around 85% of the Iranian banking industry. However, after the 2008 and 2009 privatization of significant public commercial banks, private bank assets have surpassed public bank assets. As a result of the licensing of private banks assets increased from 13% in 2007 to 65% in 2016. The stock exchange lists the 7 major private banks, and they are among the most actively traded companies. Multilateral sanctions have impacted all sections of the Iranian economy, directly or indirectly, particularly during the 2 most recent waves of sanctions, 2010 to 2013 and 2018 until present. Iran's linkage to global markets have been hampered by trade and financial sanctions, causing the economy to contract, inflation to rise, and the currency to weaken. Sanctions have harmed firms by increasing the cost of imports, limiting export destinations, and limiting local and international investment options. Because of the interruptions to personal and company finances, more Iranians are abandoning the labor, and the number of poor Iranians is rising. Existing flaws and inefficiencies in the Iran state, such as a bad business climate and widespread corruption, were worsened by these constraints. The COVID-19 outbreak has lately exacerbated the sanctions related to pressure. The impact on the oil sector has been the most severe, given the global nature of the oil market and the dominance of the US dollar. While oil's share of the economy is relatively small, it is a key source of revenue and hard currency. Sanctions have also disrupted Iran's non-oil export industry through direct sanctions and the severing of international banking connections. For their 20-year economic vision and 5-year growth plan for 2016 to 2017 to 2021 and 2022, the Iranian authorities have embraced a comprehensive market-based reform agenda. The strategy is built on 3 pillars. First is the creation of a robust economy, second is scientific and technological advancement, and the third is the promotion of cultural excellence. Reform of state-owned firms, the financial and banking sectors, and the distribution and administration of all income are among its top goals. The strategy calls for the yearly economic growth of 8%. In 2020 to 2021, real GDP was nearly identical to that of 2010 to 2011, while real GDP per capita was nearly identical to that of 2004 to 2005. Following the restoration of global and local business after the worst of the pandemic, recovery in the oil and service sectors 11.7% and 6.5% growth respectively led to 5% year-on-year increase in 2021 to 2022. However, due to drought and electrical shortage, the agriculture sector shrank by 2.1%.
All financial instruments in Iran must adhere to Sharia rules and regulations. As a result, it is illegal in the financial system to deal in traditional financial products or to establish a financial institution whose performance is incompatible with Islamic norms and regulations. Islamic financial instruments in Iran are Islamic equity market, Islamic derivative market, sukuk market, Islamic treasury notes market, and Islamic mortgage-backed securities. Financial institutions in Iran are investment banks, brokerage companies, Islamic funds, and rating agencies. In the stock market, there were several notable changes in 2016. First, Islamic equity market. Following the nuclear discussions, major aspects of the financial sections were lifted, giving investors some hope. Despite having achieved their objectives, investors are still hungry for more. Security exchange market capitalization topped US 130 billion. In 2017, there were possible developments. Corporate performance is expected to improve in the future. This trend may be strengthened by fresh IPOs in the equities market. Next, Islamic derivatives market. As in 2016, gold coin futures contract, as in previous years, played a significant role in the Islamic derivatives market. Currency derivatives and agriculture futures were both in the spotlight. When potential developments era in 2017, it is envisioned that a portfolio futures market will emerge as an alternative to traditional index futures in the Sharia-compliant derivatives markets. Currency futures could be another newbie in the Islamic derivatives market in Iran. Besides that, the 5 forms of sukuk issued in the Iranian capital market in 2016 were ijarah, musyarakah, murabaha, salam and istisna. The sukuk manfaah structure underwent extensive discussion before being complete. In 2016, investors were introduced to the first sovereign sukuk facility with an ijarah structure, and the state of Iran was supported by this sort of sukuk. In 2017, Iran aims to implement a sukuk manfaah framework to fund recognized business. Hence, the government employed Islamic treasury notes with tenors of less than a year for fundraising after the Sharia Board of the Securities and Exchange Organization of Iran, or called as SEO, passed a resolutions. The notes were released more than 10 times in the market from the beginning to the end of 2016. Contractors who complete government projects were given notes which they could discount on the capital market and use to secure finance using Islamic treasury notes. The government discovered an essential alternative fundraising approach in Islamic treasury notes, and this process is projected to continue in 2017 with new facets. Last but not least, Islamic mortgage-backed securities made their debut following extensive talks. Islamic mortgage-backed securities are primarily utilized to securitize bank maskans residential receivable in Iran. Because the securities had no ratings, the bank was authorized to guarantee payments to investors in order to safeguard them. Islamic mortgage-backed securities IMBS were first issued in 2016, and the market need additional support and cooperation in this sector, as well as greater convergence between the capital market and the banking system. The example for financial institutions in Iran is investment banks, brokerage companies, Islamic funds and rating agencies. First, investment banks. In the Iranian capital market, there are 9 investment banks. The other 8 investment banks, with the exception of one specialized home investment bank, offer a broad variety of services to clients. In this area, no newcomers are predicted, although Iranian investment bank service offering should expand in 2017. Besides that, in 2016, more than 180 funds offered a variety of services, including fixed and variable income, as well as index tracking in Islamic funds. In 2017, we hope to see the growth of funds and their client diversity. Construction fund and new exchange rate funds in particular are projected to gain traction in 2017. Lastly, regulations for the formation of rating agencies were announced by the SEO. No rating agency had been officially constituted and began activities at the end of 2016. Hopefully, 2017 will be the year when a rating agency is officially established in the market. In a nutshell, while 2016 witnessed several positive developments such as the introduction of Islamic mortgage-backed securities and the growth of Islamic treasury notes market, 2017 may see the introduction of the sukuk manfaah structure to the market. In terms of derivatives, the SEO and Iran Central Bank should work together to develop Islamic currency features. In terms of financial institutions, it is envisaged that a first rating agency will be established in Iran. Overall, the Iranian financial sector has a lot of room to grow in terms of Islamic financial instruments and derivatives as well as financial institutions.
So now, let's move to our opinion about Islamic banking and finance system in Iran after we did some research. So, in views of prospect and also development, first point that we found is Iran Islamic banking and finance shows increment year before. So basically, after we did some research of the economic growth and also other financial system performance, we see that the performance of the Iran system, especially in banking and finance, it shows positive result or it shows increase So this shows that Iran banking and finance system has developed very well in the Iran country. So basically, after they implement the Islamic economy or Islamic banking and financial system full in their country, it shows boost of their economy performance. So this Islamic banking and finance system has affected their economy in a very good term. So next, after we did some research also, we found our second point, which is Iran has a good and also did very well management system. So basically from the year before, which is 2019 and also 2021, Iran has a little bank branches, but after that, in year 2022 or nowadays, Iran has more than bank branches than year before, because this shows that even though Iran has more branches, but they can also manage their branches very well and also shows good performance in every branches, not only one branches but every branches shows a good performance. Basically, Iran has also shows other country that even though they use fully Islamic, they can also implement it and manage it very well and shows good performance. Iran also was appointed as a major of in IFSB, or known as Islamic Financial and Services Board. So there has no idea Iran is very good country that can develop and also manage Islamic banking and finance system very well. So basically, in conclusion, we have covered 5 topics, which is first, history of IFS and IBF in Iran. Second, we have covered the fund size of the Iran. Third, we also covered the number of Islamic banking institutions compared to conventional institutions. Fourth, we covered also the relevant issues in Iran. And fifth, we have expressed our own opinion after we did some research. So basically, from these 5, we get this point, which is in the history of development, Iran has moved to the fully Islamic from the conventional before. So for the number of the banking institutions in Iran compared to conventional, which is Islamic banking in Iran has fully authorized or fully used in Iran. So basically there is no conventional bank, but they also use some of the conventional concept, but they did as Islamic fully bank. So basically that is for the second point. For the third point, which is the fund size and also calculation of the growth rate, so we have shows the number and also calculations from the year before and until the present day. So it shows increment, and that is good for Iran country. So fourth, the relevant issues, we found that the fund instruments and also financial instruments has some issues, but Iran has managed it very well and find a solutions to make it clear and also have the problems and make it banking and financial system in Iran very well and has a positive result. And after that, our opinion. So we expressed our opinion after we did some research. So we found that Iran has a really good management system, and also we found that Iran also has a very good number of bank branches and shows fully Islamic banking and financial system and has been a role model for the other countries. That's all for the conclusion.